Hi guys, hope you're doing well. Nick here, Managing Director at Verta Property Group, and today I'm going to go through our new phase launch in Trafford, Manchester, called One Trafford Edge, which we're really delighted to bring to market because it's one of the best priced new builds in the city, phenomenal location, major regeneration happening minutes away from your doorstep, and there's a lot of other features that we really like from the development as well. So yeah, today I'm going to run through One Trafford Edge and give you an understanding of this new phase of units that have been released, which is 60 units, 10 one beds and 52 beds, and let you understand the investment case and what our thoughts are on it. So let's get started. So we'll go through location and market information. A lot of people will be familiar with Manchester anyway, but a bit more micro information should be helpful. Obviously, the development itself, we'll look at the numbers and the security involved and give you a quick understanding of us and who we are, and then give you an understanding of the next steps. So in terms of the location, it's M32, so just outside Manchester City Centre. You're a couple of minutes away from the Trafford Centre. For those football fans, you're 5 minutes drive from Old Trafford. So yeah, really, really outstanding location. We're not aiming for, a really expensive price per square foot or a really low rental yield, which you see in Manchester City Centre these days on these flashy new schemes. This will get you a lot more value for your capital in terms of the price per square foot, the rental yield and things like that. So that's one of the reasons why we're so excited about it. As I mentioned, we've got 60 units that have come in this phase. The previous phase has 100% sold out. So there's about 122 units in total in the scheme, I believe. And that first phase is gone. So now we're bringing the final 60 to market. Delivery Q4 27, 999-year lease, no ground rent. We've got a certain number of units which are short-term let approved. Obviously, we didn't want to give that for the entire building. But for those of that are looking to rent on Airbnb and Booking.com, there are a number of units there that can facilitate that. Pricing, again, 188 for a one bed, 632 square foot. So you're talking just over £300 price per square foot, which in Manchester, as I say, is exceptionally good value. And then the two beds from 251 and above. We're looking at a gross yield on the short-term let model. You're looking at over 11%. And the market forecast from Savills show 27.6% over the next 4 years for the Northwest region. And Manchester itself is growing at about 4% per year at the moment, which we expect to see increase as well. Developers called HSPG, 6,500 units delivered. They've got an extensive track record, so we're really comfortable with that. And there is deposit protection on this scheme as well. Cool. So in terms of the location, the postcode is M329JG. So as you look at the map, you're just on the southwest of the city centre, if that makes sense. So you're right next to the road, M60, in terms of giving you good transport links. As I say, you're very close to Old Trafford, 5 minutes from the city centre. And the Trafford Centre is the big one for us because that's undergoing major regeneration, which we'll speak about shortly. Cool. So touching on that then, so a couple of the big fundamental changes which are happening in the immediate location derive from tons of investment going into the area. Okay. So when you're looking at any investment, what you want to see is what we call one of the investment fundamentals alongside employment, education, etc., is regeneration. So is there money being ploughed into this area by private and public resources? So we're going to look at a few of those now. And to kick things off, we'll look at the Therme Wellbeing Resort. So if you see here on the bottom left, go up, THERME. If you Google this Wellbeing, you will see that this is a major wellness resort that's opening in, I believe it's 2028, but that is a between 450 million and 500 million pounds development. And it's expected in the first year alone to bring 1.7 million visitors. Okay, and this is very, very close to the scheme. Next one, you've got the Old Trafford Football Stadium. So those Manchester United fans will know, and I'm sure many will be familiar, that that's attracting huge amounts of people week in, week out. So it's undergoing and it's all been approved for new regeneration. So they're revamping the stadium and making it one of the most attractive in the country. 100,000 seats in terms of capacity, and it's a £2 billion investment. So you can imagine that footfall that's coming through 5 minutes from your doorstep. Now, the next one is what we call Trafford City, which is what you can see in the top right here. And the Therme is kind of part of that. But Trafford City is a major program by the Peel Group. Now, for those that don't know the Peel Group, they were involved in the likes of Liverpool Waters, Wirral Waters, Chatham Waters, um, Media City UK, where the BBC and ITV went into after and made their base. So they're major regeneration specialists, and they are ploughing in 2.6 billion in the coming years into what's called Trafford City, which will be leisure, entertainment, homes, corporate space, etc., etc. So at the moment, you've got the Trafford Centre, which sees around 44 million visitors a year. This is the third largest shopping centre in the country. Okay, so it's pretty substantial, and they are ploughing loads of money into that. Peel Group are the owners, so they are going to be doing, a huge amount of work on that. And again, this is all in the, virtually the immediate vicinity of the development. So that's ideal because you're getting in now, and then all of this, modern amenities are going to be placed nearby, which will then put upwards pressure on the values of the property. And obviously, the footfall of the traffic is going to be your tenant base effectively, whether that's short-term guests or whether that's people moving for work, etc., etc. So you're going to be in a really strong position to benefit from those numbers there. And in all of this, guys, always give the sources so you can verify this independently online. I put this presentation together. We do a lot of research and due diligence into the locations and the developments that we're offered. We're offered lots of schemes constantly every day, and people will pay us, or developers pay us, a lot of money to market them. So we're able to be picky and choose which ones we want to market. So for us, this really, really stands out. Cool. Now, I'm sure a lot of people know Manchester itself. By the way, this is the development here on the right. I'm sure a lot of people know Manchester as a strong performing market, but it really is one of the best in the country. So at the moment, if you look at government data from the Office for National Statistics, it's growing at just shy of 4% per annum. If you look at Home Track, in the latest data, it's 3.6, and that's a rolling monthly house price index. Rental growth growing at about 1.6% per annum. And then the Northwest residential market forecasts over the next 4 years to 2030 are showing a regional growth rate of 27.6%. And the other thing I would like to add on this as well is if you look at JLL, who are a major research firm and real estate agency, global firm, if you look at their big 6 residential market forecasts, they foresee Manchester having the highest capital appreciation rate of the cities that they look at and the highest rental rise value of those cities that they look at as well. So beating the likes of Birmingham, Leeds, Edinburgh, etc., and Bristol. So yeah, really, really strong market. For me, Manchester, it really is, I would say, probably the number one market in the country for this level of investment when you're looking at that ticket price between 200 and 400,000 pounds. Obviously, London has its own merits in terms of being incredibly stable, seeing that humongous tenant demand, which you're not going to get anywhere else. It's just a very low risk play, whereas you're going to get a lower entry price going into Manchester. You're going to get a higher rental return, and you're going to get a more aggressive capital appreciation rate. So yeah, outside of London, really for me, Manchester beats the likes of Birmingham, and then probably closely followed by Liverpool. Cool. As I've touched on here, this is kind of some regional data showing the Northwest performance. And obviously the Northwest, places like your Liverpools, Leeds, etc. Obviously within that region, there's going to be cities which outperform, and I believe Manchester will be one of those. But as a whole, on the average for the Northwest region, you're looking at just shy of 28% growth rate over the next 4 or 5 years. Cool. Student market. Now, this is probably not going to be your core tenant base. It's more going to be, young professionals, early stage families, and short-term let visitors, which will be staying in the scheme. However, there will be some students which stay on after university, and effectively they're transitioning from, their master's degree or their undergraduate degree going into employment from perhaps a new corporate employer in the city, and they're going to look for a scheme which is good, well located, good transport links, but still affordable, because now they're paying for a lot of stuff themselves, I imagine, now they're in employment, and with a good spec as well, which I'll discuss later. So having that core student demographic in Manchester is actually quite a benefit, and it's the largest student population outside of London in the UK, so 100,000 plus students across the various universities. And this is a big one here, the retention rate. So people are going to Manchester and they're staying there. It's the highest of any UK city outside of London again. So 51% of undergrads that go to Manchester stay in Manchester after they finish their studies. So that's going to give you a constant supply of young professionals, which are ultimately looking for quality accommodation. And again, you can see the source down here as well. Cool. Touched on this earlier, but like we're assessing the student numbers in the city, visitor numbers to the city are also super important. Again, it's underpinning your um, demand for your asset effectively. So who's going to rent this? Who's going to stay in it? So Trafford City, again, that's the Peel Group development. 44 million visitors. Trafford Centre alone, 30 million. Firm, they forecast the wellness resort 1.7 in the first year, and obviously with Old Trafford looking at 100,000 stadium capacity, which obviously people won't be there every week, but in the season, every 2 weeks, you're going to have 100,000 people on your doorstep. A good chunk of those from visiting supporters as well, who they will need accommodation. Cool. And then keep in mind as well, guys, that this is just in the immediate vicinity of the development. Obviously, you have the major investment and regeneration of Manchester itself. Like, for example, Manchester Waters, again, is another scheme from likes of Peel Group. So the development, I've kind of touched on the core points, but we've got 10 one-beds there, 52 beds. So there's only 6 short-term let approved one-beds in the whole scheme. In this whole phase. So keep that in mind. And we've got 30 short-term let approved 2-bed. So if you want to rent on Airbnb and booking.com, let us know because you can secure one of those. Delivery queue 427, 68 parking spaces. They cost £17,500 each. 999 year lease, no ground rent, £2.50 estimated service charge. And you've got the postcode there down in the bottom right. Cool. Now, this is a factor that I like to touch on because a lot of investors, sometimes they're put off by apartment buildings, especially right in the city centre, where their developers are cramming in lots of units. So this developer, they are certainly a, how to word it, ethical/conscious developer, if that makes sense. They've done a lot of affordable housing, social housing, things like that. So their objective is not to just maximise profit on this. They've got their reputation to protect. As a result of that, they've decided to ensure that there's strong sized units available. So 1 bed's from 624 square feet, 2 beds, it's not from, they're actually all the same size. So for the 1 beds, they're all 624 square feet, and there's 2 beds, all 732. Slightly different layouts available on the 2 beds. So if you want something open plan, or if you want that kitchen separate, where perhaps the smell isn't wafting in, etc., then you've got that option as well. But they're definitely larger than average apartment sizes in this scheme. If you look at the Manchester average of 380 to 450 for new build 1 beds versus 624 for us. So yeah, that's a really strong benefit as well for those that are really focused on that. One, the size, but also the value that you're getting for your money in terms of the price per square foot. Cool. I won't go through the full spec now, but we have the intended details and appliances and ultimately the specification that you're going to expect. We have that for you. Now, I really like this factor, guys. So although this development is just outside the city centre, you've got a lot of amenities on site. So you've got gym, you've got sauna, you've got cold plunge pools, you've got co-working space, you've got lobby area, lounge, etc., and then obviously the individual apartments as well. So the idea being it's not just a routine plain tower block. This is a high-spec new build development which has lots of amenities on site and then 5 minutes drive from everything you would need, basically. So yeah, it's nice to have that, quality hotel standard on-site amenities. Now, the developer, so they're called, as I said, HSPG. So have a look on their website, but they've been around in a long time. As I've touched on, they've worked with a lot of local authorities, council, housing providers, etc. But they've certainly been doing this for a while. As I say, 10-year track record, 6,500 units delivered. So you're in good hands with this developer. So in terms of the numbers, a couple of bits to think about. So obviously the entry price, the ticket price there from 188 to 207 for 1 beds, and then 251 up to 275 for 2 beds. And guys, keep in mind that some of the higher floors in this scheme, you can pick up a 1 bed there for, the likes of, 203 grand, let's say, for something that's a high floor, 5-star standard amenities, and you're looking over the skyline of Manchester for, 205 grand. It's exceptionally good value. It's so hard to get even a standard 1 bed right in the middle of town for that. So yeah, keep that in mind. And they're going to be larger than average sizes. And then rental yields, as I say, you really focus on that short-term let model. We've had a management company look at this scheme, provide their estimation. So yeah, you're looking at just shy of 11.2% gross return on that. And as I say, the capital growth of Manchester is very, very strong. Now, just to touch on this one quickly in terms of the return on cash invested. So when investors are analysing schemes, sometimes they say, look, I don't want to wait for completion. I want my money working for me now, which is a common misconception. Your capital is going to be working for you. So in this case, the deposit structure is a 20% requirement from the development, okay, from the developer. So you reserve your unit, you pay £4,000 to reserve it. 28 days later, after the legal process, you pay your 20% deposit, less the £4,000 that you've already paid. Okay, so you're 20% into the deal now, which let's say on 200k, obviously that's a £40,000 into the deal. Now delivery is expected in Q4 27. So if we keep it simple when we say a 18-month build time, let's assume that a uplift takes place of 15% on the property value during that construction period. Okay. So as I touched on earlier, Manchester is growing at around 4% per year, but that doesn't cater for the fact that you're buying in the early stage of a large scale refurbishment, effectively an off-plan purchase. It's because they're ripping out the entire internals, they're redoing the externals, the facade as well. So it's going to be a brand new specification basically. So you're going to make profit from the fact that you've bought pre-construction effectively, and then as the development takes shape and progresses into a premium new build scheme, then obviously you're going to profit from that, as well as the natural market momentum of 4% per annum. So we believe that a 15% uplift from now until handover is entirely achievable and in fact relatively conservative. But if you look at that on a £200,000 purchase price, and then if you look at a 18-month time frame, that would give you, on a 15% uplift, £30,000 in equity created. Okay. And you've only put in £40,000 to the deal. So your return on cash invested potentially over the next 18 months, if these projections play out, is 75%. Okay. So, I mean, testing my maths here, but if you annualize that, that's, what is that, 37.5%, something like that. So you are putting your deposit in, you're getting that growth rate on the full property value, and then you're benefiting from that 18-month period. And then you get to completion in 18 months' time. Look, you're talking about the end of next year, and you have a brand new prime asset there. More importantly, in a development where you've chosen the unit, what floor you want, what view you want, what size you want, etc., etc. That's the ability that you're getting from purchasing now, as well as that baseline pricing structure. So yeah, common misconception that your money isn't working for you in off plan. It certainly is. And if you look at this scheme in particular, given the deposit level that's requested and the anticipated growth rate, you're looking at a 75% return on cash invested figure from what you've put into the deal over that 18-month build time frame. So hopefully that gives you some idea. Now, if you're looking post-completion, 5-year hold, let's assume just a cash purchase, you're looking at a capital growth appreciation rate of £63,545. And then if you assume and by the way, that's at a 5% growth rate. It's growing at 4% now, but if you look at 5% over the next 5 years post-completion, in line with market forecasts, and you look at just say a 7% net return, just for example, on the short let market, if you combine those two figures together on a purchase price of 200 grand, you're looking at an uplift or a profit of £144,045, 5 years post-completion. Okay. And then if you look at the profit during construction, and if you look 5 years post-construction, that's what that figure here is on the right. And again, that's assuming a 5% appreciation rate post-construction for 5 years, and then a 15% uplift during the build and a 7% net return. All which, we can justify, show you data on, and you can, effectively decide if you, want to take that opportunity. Cool. So as I've said here, I mean, we've written AST here. I mean, given the new regulations, they're actually all periodic short hold tenancies now. They're automatically changed. But in other words, you can rent to a long-term let tenant, i.e., someone working in Manchester, young professional, even a student that's maybe doing their masters, something like that. Or you can do short-term let where you can get higher revenue. And again, all those visitor numbers are going to contribute to that demand. Here's the short-term let figures. What I would say is if you're looking at doing Airbnb and Booking.com, speak to us. We'll introduce you to a management company. We work with several, but they can get on the phone with you and talk you through the figures. What's the expected occupancy rate, what are the operational costs, what their fees are, etc., and you'll have a really strong understanding. Then you can do that at any stage. You can do that pre-reservation, you can do it during construction, or you can do it just before completion. It's completely up to you. However, they've given us these forecasts, and you are able to run your numbers on these. So yeah, 1752 for a 1-bed and 2160 for a 2-bed. Cool. And here's just a bit on Trafford and the rental demand itself. We kind of touched on this earlier, but there's a few more stats there. This is the wellness resort that I touched on, which is due to be a really standout landmark. Cool. So 5 reasons why we like it, and this is the fundamental investment case. So number 1, the below market value entry. I'm telling you now, you won't find a new build scheme in Manchester on the market now for 188 grand. It just won't happen. Old resale developments, which are 10 years old, which have short leases, which have cladding issues, etc. Yeah, of course you will. However, for a new build spec of this standard, you won't find it, especially at that £300 price per square foot rate as well. Funded regeneration, so major companies doing this, such as Peel Group. You've got the Therm, you've got Old Trafford, Trafford City, etc. For over £5 billion worth, this area is going to completely change in the coming years, and you're getting in there now, and you're going to benefit from that. Institutional grade developer, I've said that because they've done thousands of units, which most developers haven't done. Flexibility of doing short-term let or AST, and then Savills backed forecast. By that, I would just say the general market performance. So rental value rises and capital appreciation. Manchester, you are getting the best or one of the best in the country. Cool. Now, I'm not going to go into too much detail on this, but there is a deposit protection structure in place for investors. So that 20% you put in, it is somewhat protected. Speak to us about that. We'll give you the legal information, but there is a charge which is governed by a security trustee. So if in the event that the developer defaults on the scheme delivery, then you are protected to that 20% level. Obviously, that's in addition to the new build warranty, which comes as standard and is a legal requirement on off-plan schemes as well, or new build schemes. Developer track record is obviously another layer of security for you to keep in mind. By the way, 20% is a relatively low deposit level. We've got other schemes asking for 25, 30%, some even 50. 999-year lease, so you don't have to worry about renewals and things like that. And then obviously from our side, we are a member of the Property Redress Scheme, registered with HMRC, ICO, etc. And I've just touched on that. There's a few stats about us. The main thing you need to know is that we work with most developers in our micro segment or in our niche in the country. So places like Birmingham, Liverpool, Manchester, Leeds, Huddersfield. If there's a new build scheme there, normally we are involved with it into some capacity, or we've reviewed it, etc. So this is one that we've picked up and decided to really focus on because of the merits of it. As I say, what do we actually do? How do me and my team help? So one, we obviously find the projects, because this is not available on the likes of Rightmove, etc. So we find the projects, we do our due diligence. Our team has decades and decades of experience for different investment agencies, different property developers, different property management companies. So we know what we're doing when we're assessing and deciding what scheme to take to market, because quite frankly, if we didn't, we wouldn't be able to sell it, and as a result, we wouldn't generate sufficient revenue. So we have to make sure that all the boxes are ticked. It's a viable product for the developer side, and it's attractive to investors. So we do that first stage. Obviously, we can help with mortgage introduction, solicitor introductions, accountancy introductions, property management, furnishing, etc. Lettings that I've mentioned there. If you want to buy in a company name, we'll set you up one for free via our ACCA qualified accountant. We'll do that post-reservation for you. So if you want to buy in a company name, you certainly can do. And then aftercare, we'll give you construction reports throughout the build, and we'll be with you right up until the point you've got that income coming into your account month in, month out. That's our job. That's how we add value. We don't charge any fees to investors. We are paid by the developers once we sell a property, as with most, estate agency models, so to speak. A couple of testimonials there for us, but you can have a look on Trustpilot and verify those yourself. In terms of the long-term game plan, guys, so you can sell at completion if you want. You can sell just before completion. There are these contracts are reassignable, which means you can sell prior to practical completion. You can hold it and then maybe give it 2-3 years post completion, refinance the property, because you would have had 5 years worth of uplift in that case then. So you should be able to pull a bit of capital out. Let's say over a 5-year period, you've seen a 30% uplift on a £25,000 purchase. That's obviously 75 grand. So yeah, you could refinance that, pull 75% out, and then roll into another property investment and build your portfolio that way, which you've been helping people do now. So you've been operating since 2019. So yeah, that's certainly viable. And then you've obviously just got the option to hold, generate cash flow month in, month out. Perhaps those who are more geared towards retirement and want that consistent cash flow, and then want to see that asset appreciate over time to give to your children, etc., etc. So, number of opportunities for you there. Now, in terms of the payment process, so what I'd suggest you do first is speak to either myself or your investment consultant who you've been liaising with. They will talk you through, answer any questions you've got, give you all the reassurance, due diligence material, any legal questions, tax questions we can introduce you to relevant partners for as well. And then once you're happy, pick out a unit. We can make recommendations for you. Once you've chosen your unit, you would pay a reservation fee of £4,000 via payment link. You would complete a reservation agreement and you would submit your anti-money laundering documents, which is ID and proof of address dated within the last 3 months. You would then instruct the solicitors. We've got panelled solicitors you can use. Normally, they're about £2,000 plus VAT and disbursement. Sometimes they can be a bit cheaper than that, but it depends on the structure, etc., etc. So you reserve the unit, you pay your fee, you do your administration. We then instruct the solicitors. The solicitors will contact you. You give them authority to proceed. You then go through that exchange process or the legal purchase process, etc. You'll have a dedicated contact at Verta for any questions you need. But obviously, most of the comms at that stage will be with your solicitor. Once you're happy, the solicitor's happy, and the developer's solicitor's happy, you'll exchange contract. We aim for that to take place within 28 days. You then pay your 20% deposit, less your £4,000 legal fee. You exchange contracts. You are then the legal owner of that property. Okay? So you then go through the construction period. We'll keep you posted with quarterly construction updates. And then on completion, you take handover of the property. We can help you furnish it. You can have the property managers ready to go there. So you don't have to visit the property physically, etc., etc. We're all set up for 100% remote service. We've got investors all around the world. So yeah, we can make sure we hold your hand from start to finish, so to speak. But that's it, guys. If you want to have a conversation with me, feel free to, there should be a link or something around this video. You should see my WhatsApp there. If not, just drop me an email, nick.highland@vertapropertygroup.co.uk. Otherwise, as I say, you can speak to your consultant who you've been liaising with so far, or have a browse on our website, vertapropertygroup.co.uk. We've got developments across the likes of Manchester, Liverpool, Leeds, Huddersfield, Birmingham, London, and commuter belt London as well. So whatever you're looking for, we can certainly assist. However, I do believe that this is one of the front runners in the portfolio at the moment. So I'll wrap it up there, guys. Look forward to speaking to you soon, and take care.